Vince Peroni here. So, throughout the years, my customers would reach out to me and ask, Vince, can you do a HELOC for me? And my answer was always, unfortunately, no. Therefore, I'd be referring them to someone, or I would be directing them to go back to their local bank for a HELOC. But great news. That product has now become available to the broker channel. I can now do HELOCs. What is a HELOC? It stands for Home Equity Line of Credit. You're accessing the equity that you've built up in your house over the years, and you're pulling it out in the form of cash. Most HELOCs will go to 80%. Some will go to 89.99. Luckily, I have a lender that will go to 89.99%, and that's of the appraised value. So how does it work? For example, let's say you currently owe on your current mortgage, your loan to value comes out to 60%. You have 40% equity. You could either tap into 20% of that, or you could go as high as 29.99%, so that between your first mortgage and now the HELOC, that combined equals 89.99%, which it's called CLTV, or LTV plus the HELOC is the CLTV, that combined 89.99. So whatever money you're pulling out, you would pay interest only. It's not amortizing like a normal loan. So interest only payment. And usually you have that interest only payment for a period of 10 years. Some HELOCs, it's a balloon where it becomes due after 10, or at that point it converts over to an amortizing loan, in which whatever the balance is, they stretch that payment out, principal and interest, over a period of the next 20 years, so that then it would be paid off in a 30-year term. HELOCs, the interest rate is based on prime plus, and the plus depends on your credit score, depends on if you're taking, if you're going up to 80 or if you're going up to 89.99. So it depends on your specific situation, and it's a variable interest rate. It's not fixed. So as the rates go up, the interest rate goes up, but as the interest rate goes, as rates go down, the interest rate will go down as well. So right now, unfortunately, rates are up, but that's part of the reason why a lot of people are needing a home equity loan, is that, if you have credit card balances, well, you've been seeing those minimum payments going up, or you're looking to do that kitchen or that remodel. Well, what does that interest rate look like on those items, where a HELOC, you could be securing a lower interest rate than some of the interest rates that these home improvement companies would be offering. So it depends on your situation, but if you have questions, if you're looking in the market for a HELOC, please feel free to reach out. Give me a call, shoot me a text, send me an email. Hope to hear from you. Thank you.